Imagine this. You wake up tomorrow, and the person who depends on your income the most is suddenly left without it. Bills keep coming. Rent or mortgage payments do not stop. Groceries still need to be bought, but you are not there to provide anymore. What happens then? That chilling thought is exactly why term life insurance exists. And today, I am going to break down why you absolutely need it, how it works, and how to get it without wasting money. Stay with me, because by the end of this video, you will see term life insurance in a way you never have before. Number 1. What is term life insurance, really? Term life insurance is the simplest type of life insurance. It gives you coverage for a set number of years, usually 10, 20, or 30 years. If you die during that period, your family gets a payout called a death benefit. If you live past that period, the policy ends. Think of it like renting protection. You pay for coverage for a specific time. After that, it is gone. For example, if a 30-year-old buys a 20-year policy worth $500,000 and passes away at age 40, the family receives $500,000. If that same person lives till age 51, the policy simply expires. It is straightforward, and that is why so many financial experts recommend it. Number 2. Why do people need it? Here is the truth. Term life insurance is not really for you. It is for the people who rely on you financially. Imagine a young couple. They just bought a house, and they have 2 kids. If one spouse suddenly dies, the other is left to pay off the mortgage, raise the children, and keep everything afloat. Without life insurance, that burden can crush them. Or think about a single parent working 2 jobs to raise a child. If something happens to them, who pays for rent, food, and education? Term life insurance makes sure that child is not left helpless. It is about protecting your loved ones from a financial disaster when you are gone. Number 3. Why term life is better than whole life insurance. Many beginners get confused between term life and whole life. Whole life lasts forever and builds cash value, but it costs a fortune. In fact, whole life insurance can be 10 times more expensive than term life for the same coverage amount. Here is an example. A 30-year-old may pay $30 per month for a term life policy worth $500,000. That same person could pay $300 per month for whole life. What would you rather do? Pay $30 and invest the difference, or pay $300 and tie up your money in an expensive policy? That is why most financial planners suggest term life. It is simple, affordable, and gives you the protection you need. Number 4. How much coverage should you get? This is the big question. How much is enough? A simple rule is 10 to 15 times your annual income. So, if you make $50,000 per year, you should get between $500,000 and $750,000 in coverage. But here is where it gets interesting. Instead of just looking at income, think about debts, kids, and future goals. Do you have a mortgage? Add that in. Do you want your kids to go to college? Add that in too. For example, let's say you make $60,000 a year. You owe $200,000 on your mortgage, and you want $100,000 per child for college. If you have 2 kids, that is $200,000. So, $600,000 plus $200,000 plus $200,000 equals $1 million in coverage. That way, if you die tomorrow, your family can pay off the house, cover education, and replace your income for years. Number 5. How long should the policy last? This depends on your stage of life. If you have little kids, you want a term long enough to cover them until they are grown. That could mean a 20 or 25-year policy. If you just got married and bought a house, you may want a 30-year term that matches your mortgage. If you are older and only need coverage for a few years until retirement, maybe a 10 or 15-year term works. The key is matching the term length with your biggest financial responsibilities. For example, a couple with a newborn may pick 25 years. By the time the policy ends, their child is financially independent. Number 6. How much does it cost? Here is where people are shocked. Term life insurance is way cheaper than you think. A healthy 30-year-old can often get $500,000 in coverage for 20 years at less than $30 a month. That is about $1 a day. To put it in perspective, that is less than your daily coffee run. Of course, the price depends on age, health, lifestyle, and the length of the term. Smokers, for example, will pay a lot more. But for most young and healthy people, It is one of the most affordable protections you can buy. Number 7. The biggest mistakes people make with term life insurance. Mistake 1 is waiting too long to buy. The older you get, the more expensive it becomes. Mistake 2 is buying too little coverage. People think $100,000 sounds like a lot, but in reality, that money can vanish quickly when paying off debts and covering living costs. Mistake 3 is picking a term that is too short. You do not want coverage ending when your kids are still in high school. Mistake 4 is forgetting to update beneficiaries. Life changes, like marriage, divorce, or kids, mean you should update who gets the payout. By avoiding these mistakes, you ensure your family is really protected. Number 8. Real stories that show why it matters. Let me share 2 quick examples. Sarah, a mother of 3, had a 20-year term life policy worth $500,000. When she unexpectedly passed at 42, her husband used the money to pay off the mortgage and fund college savings for the kids. It changed their future. Now compare that to Mark. He kept saying he would get life insurance later. At 38, he died of a sudden illness. His wife had to sell their home, move in with relatives, and work 3 jobs just to survive. The difference between these 2 stories is just one decision. Number 9. When should you buy it? The best time is right now, when you are healthy. Insurance companies look at age and health first. Every year you wait, the price goes up. Even worse, if you develop health issues like diabetes or high blood pressure, you may get denied coverage. So the best time to lock in a low rate is today. Think about it like planting a tree. The best time was 20 years ago. The second best time is now. Number 10. What happens when the term ends? This is a question people often worry about. What if you outlive the policy? When the term ends, the coverage stops. Some companies allow you to renew, but the price will be way higher because you are older. That is why the best strategy is to buy a term that lasts until you no longer need coverage. By then, ideally, your house is paid off, your kids are grown, and your retirement savings are strong. At that point, you may not even need life insurance anymore. Number 11. How to actually buy term life insurance. The process is simple. Step 1. Decide how much coverage you need and how long you want it. Step 2. Shop around. Compare quotes from different companies. Online tools make this easy. Step 3. Apply. You will answer questions about your health, lifestyle, and family history. Step 4. Most people take a quick medical exam. This could be a nurse coming to your home to check blood pressure, weight, and a blood sample. Step 5. Once approved, you start paying the premium and the policy begins. That is it. Number 12. Why it is called the greatest love letter you can leave behind. Life insurance may not sound romantic, but it is one of the purest forms of love. When you buy it, you are telling your family, even if I am gone, I have taken care of you. It is like leaving a safety net so they can grieve without worrying about bills. That is more powerful than flowers, vacations, or gifts. Number 13. Can you get coverage without a medical exam? Yes, some insurance companies offer what is called no medical exam, term life insurance. This means you answer health questions, but you do not have to go through blood tests or nurse visits. It is faster, sometimes you can get approved within a day. But here is the catch. It usually costs more, and the coverage amount may be limited compared to traditional policies. It is a good option if you need coverage quickly or if you are nervous about medical exams. Number 14. Can you have more than one policy? Absolutely. Many people layer policies to match their needs. For example, you might buy a 30-year policy to cover your mortgage and a 20-year policy for your children's education. This way, you are not paying for unnecessary coverage once certain obligations are gone. It is like stacking blocks to fit the shape of your financial life. Number 15. What happens if you miss a payment? Most companies give you a grace period, usually around 30 days, to catch up if you miss a payment. If you do not pay during that time, the policy will lapse and your coverage will end. That means if something happens after it lapses, your family gets nothing. Always set up automatic payments to avoid this. Number 16. Can you convert term life to permanent insurance? Many term life policies include a feature called conversion. This allows you to switch from term life to a permanent policy, like whole life, without going through another medical exam. It can be helpful if your health changes and you still want lifetime coverage. But remember, the premiums will be much higher once you convert. Number 17. Does your job affect your coverage? Yes. Insurance companies look at your occupation when setting your rates. If you have a risky job like a firefighter, pilot, or construction worker, you may pay more. If you work a desk job, your risk is considered lower, and you may get cheaper premiums. It all comes down to the level of risk they take on. Number 18. Can stay-at-home parents get term life insurance? Many people think life insurance is only for the person earning money, but that is not true. Stay-at-home parents provide massive value, like childcare, cooking, and running the home. If something happened to them, the surviving parent may need to hire help, which can cost tens of thousands of dollars each year. That is why stay-at-home parents also need term life insurance. Number 19. Do you get tax benefits? The payout your family receives from term life insurance is generally tax-free. This means if your policy is worth $500,000, your family gets the full $500,000 without the IRS taking a cut. That makes it one of the most powerful and cleanest financial tools available. Number 20. How does term life fit into your bigger financial plan? Term life insurance is not an investment. It is protection. Think of it as the foundation of your financial house. Your income is the roof, your savings and investments are the walls, and term life is the base. Without that base, everything can collapse if disaster strikes. Life is uncertain. Tomorrow is not promised. Term life insurance cannot stop the storms, but it can make sure your family does not drown in the aftermath. So, here's my question for you. If something happened to you tomorrow, would your loved ones be financially safe? Or would they struggle to survive without your income? Share your answer in the comments below.